$10 billion for parking spaces.
High conviction aviation infrastructure, MAIA.
Right. $10 billion for private jet parking spaces. KKR must be laughing all the way to the bank after Apollo won that bidding war.
Apollo sees a massive runway here, pun fully intended.
Oh, come on. KKR just needed a secondary buyout to return cash to their LPs.
You are so cynical.
I just look at the data. We will pass the Atlantic Aviation math. Plus, Biogen dropping $5.6 billion on a rare disease bet.
And non-tech companies quietly panic buying AI startups. The rundown. $1 billion for powdered meals. I just can't get over that number.
Danone clearly sees something we don't. $1 billion for Huel. I guess tech bros drinking their lunch is officially a defensible asset class now.
Danone goes from artisanal yogurt to shaker bottles of gray sludge. Incredible.
Speaking of pivots, Carlyle is taking a majority stake in MAI Capital Management. Valuation is north of $2.8 billion.
Classic wealth management roll-up. But this screams secondary buyout pressure. Private equity is sweating right now. Limited partners want their cash back, so firms are just tossing assets back and forth.
It's a giant game of hot potato, but with billions of dollars.
Well, Biogen isn't playing hot potato. They just dropped $5.6 billion on Apellis Pharmaceuticals, $41 a share to bulk up their rare disease pipeline. Honestly, that feels like a steal for their immunology IP.
A steal? Oh, come on. $41 a share is an insane premium if you actually look at the recent trial data. Biogen is overpaying because they're desperate for revenue replacement.
They're buying the platform, Maya. You have to pay up for rare disease assets right now. You can't just look at a spreadsheet and ignore the long-term moat.
I'll believe the moat narrative when I see the proxy filings tomorrow. I'm specifically hunting for the breakup fee structure. If Biogen realizes they overpaid, I want to know exactly what it cost them to walk away.
Fair enough. But if you want real scale, look at infrastructure. GIP and EQT are teaming up to take AES Corp private. $33.4 billion.
That is a massive swing. And regulators are going to put that under a microscope. Energy megadeals get zero free passes from Washington right now. Buyers are embedding crazy regulatory flex clauses just to survive the antitrust review.
Geopolitical due diligence is the new normal.
It absolutely is, but AES isn't even the wildest infrastructure deal on the board today.
Oh, you mean the bidding war KKR just triggered?
Exactly. Apollo just crossed the $10 billion mark to take Atlantic Aviation off KKR's hands.
$10 billion for private jet parking lots. I love it. We need to unpack how Apollo actually won that dogfight. The big one. $10 billion for parking lots.
Highly exclusive, heavily guarded parking lots for Gulfstreams, Nate. But yes.
Apollo is reportedly closing in on Atlantic Aviation, buying it from KKR for a cool $10 billion. It is the ultimate sponsor-to-sponsor handoff.
I read the rumor mill on this one. The whispering is that KKR ran an incredibly tight process and manufactured a brutal bidding war. Apollo got pushed to that $10 billion mark because they were desperate to deploy capital into high-conviction infrastructure.
You say desperate, I say highly motivated. Look, KKR has limited partners, absolutely screaming for distributions right now. The whole private equity industry is facing massive pressure to return capital. Secondary buyouts are the easiest exit ramp when IPOs are sluggish.
Easiest for the seller, sure. But I am looking at this from Apollo's side, and I frankly do not buy the math. $10 billion is an absurd multiple for aviation services. That valuation assumes a permanent, uninterrupted boom in private flight.
I completely disagree. You are underestimating the moat here. You cannot just build a new private terminal at Teterboro or LAX. The zoning and regulatory hurdles are impossible. It is literal monopoly real estate.
A monopoly on selling overpriced jet fuel.
Exactly. Have you ever bought an $18 turkey sandwich at a terminal? Now scale that margin to 10,000 gallons of aviation fuel for a G650. My old managing directors would happily pay it and just bury the markup in the client's deal expenses.
I love when you casually justify corporate waste.
It is a former banker's love language, Maya.
Fine, the margins are great, but a $10 billion price tag means Apollo has to squeeze blood from a stone to hit their baseline return thresholds. I suspect we will see them try to automate operations, maybe roll up some smaller regional players to justify the multiple.
Or they just hold it for 5 years and pass the parcel to the next mega fund. The beautiful circle of private equity life.
There is another layer here, though. Dealmakers are terrified of supply chain risks right now. We are seeing so many regulatory flex clauses and tariff adjustment mechanisms in cross-border deals. Domestic infrastructure like Atlantic Aviation is completely immune to that geopolitical mess.
That is actually a really smart point. Hard assets on US soil, predictable cash flow, it is the ultimate safe haven trade, just with a $10 billion entry ticket.
And speaking of massive bets on domestic hard assets, $10 billion is practically pocket change compared to what is happening on the energy grid.
Oh man, you are talking about the AES deal. $33.4 billion. GIP and EQT teaming up for a massive infrastructure play.
We need to watch the regulatory response on that one tomorrow. If Washington lets a $33 billion energy buyout sail through, it is going to test the waters for a whole new wave of mega deals. Seriously. Voices. Positive, yes.
Reading this note from the analyst this morning about private equity facing intense pressure to return capital to LPs. They're calling it a flurry of exits through secondary buyouts.
Flurry is a polite word for it. It's a full-on secondary buyout carousel. Just look at KKR offloading Atlantic Aviation to Apollo.
For $10 billion?
Right. And the rumor mill is screaming about an intense bidding war that pushed Apollo to that $10 billion mark. You really think Atlantic is worth that? Or did Apollo just catch auction fever?
Oh, it's definitely auction fever. I've seen this movie. You get 3 associates building models at 2 in the morning, convinced they can squeeze another 50 basis points of margin out of private jet fuel. But honestly, Apollo needs high conviction infrastructure plays right now.
I completely disagree. $10 billion is an absurd premium for what is essentially VIP airport parking lots. I'm way more interested in what the deal lawyers are quietly slipping into the contracts for these mega transactions.
You mean the tariff adjustment mechanisms?
Yes. Commentators are calling it geopolitical due diligence. Buyers are literally writing regulatory flex clauses into the architecture of these deals now.
Which is just a fancy banker way of saying, if a trade war breaks out, we want a massive discount.
Or an exit hatch. You're seeing it everywhere, especially with non-tech companies quietly scrambling to buy up small software firms. They're desperate to embed AI into their supply chains before their competitors do.
Because AI has officially transitioned from a buzzword to the primary engine for M&A deal architecture. The experts are actually writing that with a straight face.
Hey, the deals are happening. It's not just hype when actual cash is changing hands. But speaking of massive cash and regulatory flex clauses, we need to talk about that $33.4 billion AES Corp buyout.
GIP and EQT teaming up, that is going to severely test the regulatory waters for energy megadeals.
Exactly. And while we wait for the regulators to weigh in on that one, we have some actual footnotes to dig into regarding Biogen's $5.6 billion rare disease bet. Spill the tea?
$10 billion for a company that basically parks private jets and sells them overpriced fuel. The whisper numbers on this Atlantic Aviation deal were nowhere near that high.
I heard the bidding war got incredibly petty toward the end. KKR knew exactly how bad Apollo wanted it.
Oh, the banker gossip on this is top tier. You have private equity firms sweating bullets right now. They are under massive pressure to return capital to limited partners. This is classic secondary buyout territory. KKR gets a huge exit, Apollo gets to deploy cash, everyone wins except the LPs paying fees on both sides.
Wait, hold up. I disagree that this is just a fee-churning exercise. Look at the infrastructure play here. Apollo is paying up because high-conviction aviation services are basically local monopolies. You cannot just build a new terminal at Teterboro.
True, but $10 billion? That is a lot of conviction.
It is a lot of zeros, but you know what else is quietly racking up zeros? These non-tech companies swallowing up tiny software firms.
Yes, I was just talking to a guy about this. Old school manufacturing companies are terrified. They are buying up any AI startup that can predict a shipping delay. They want it embedded in their supply chain yesterday.
It is not even about the tech anymore. It is pure panic. I am seeing deals where the geopolitical due diligence takes longer than the financial audit. They are burying these wild tariff adjustment clauses right into the contracts.
Which is exactly why I am fascinated by what happens next with this massive $33.4 billion AES Corp buyout.
Exactly. GIP and EQT teaming up for an energy mega deal is one thing. Getting the regulators to actually let them buy it, we will have to see what the proxy filings look like tomorrow. Tomorrow's radar. I'm setting an alarm tomorrow just to refresh the SEC portal for that Apellis proxy.
You and your breakup fees. We already know Biogen is paying $5.6 billion.
Yeah, but I need the exact closing conditions. Biogen needs this rare disease play to work, which means those footnotes are going to be wild.
Honestly, the real drama tomorrow isn't in the footnotes. It's in Washington. I'm watching the regulatory response to the $33.4 billion AES buyout.
GIP and EQT teaming up.
Exactly. It's the ultimate test balloon for energy mega deals. Regulators are going to completely lose their minds over an infrastructure play that size.
Oh, come on. Energy gets a pass right now. Regulators only panic if you're buying a software company to hoard AI data.
Tell that to the antitrust lawyers billing $2,000 an hour to stress test this AES deal.
Good for their billable hours. We'll see whose radar is right tomorrow.
Catch you all in the next one.